What's up everyone, YTG here and I'm back with a new lecture. In this lecture, I will teach you all the important ICT concepts. And I'm saying ICT full course because ICT is a YouTuber and most of the times he teaches things that don't really work or that don't really matter. So in this lecture, I will only teach you things that really works. And after learning it, you will be a complete trader. Now these things seem familiar, like you would say, I already know what a break of structure is or what a change of character is, but everyone knows that, okay? But not everyone can trade that. You are watching this video because you are not a profitable trader. So after this video, I am sure you will become a profitable trader. And make sure not to skip any parts because in between there are usually technical things and you miss them. And then the strategy won't work for you. And the good thing about this strategy is that you can use it on gold, you can use it for indices. Also, it works on Forex like Euro, GBP, USD and all others. And you can use it on crypto too. You can use it on the major coins like Bitcoin and Ethereum. And you can also use it on the smaller cap coins which are called altcoins. So this is all in one strategy. And another thing is that you can use it on all the time frames. So if you use it on daily or 4 hour, it will give you an idea of your bias if price is going to go up or down in long term. And then on smaller time frame like 15 minute, you can do your day trading or scalping. Okay. So I will start from pullback. Okay. We will go in this sequence. So what is a pullback? I will discuss it in detail. So even if you are a newbie and you don't know the ABC of ICT, you will still get the concept, okay? So I will draw some candles here. Let's suppose this is a bullish candle, a 4 hour candle, okay? And the price is going up. So what you have to do is, when you find such candle, you will draw this line like the price is going up. Then we get another candle and the price goes up. So we will extend this line, the price is going up, okay? I won't draw the wicks because it will take time. So I won't draw it. I will only draw the bodies, okay? And here you can see that this candle, this candle swept the high of the previous candle, but it didn't sweep the low of this candle. So that's why we extended it towards the upside. The price is only going up. Now, if I draw another candle, the price is still going up. So we will draw another line. Let's suppose we get another candle which is bearish or which is a red candle. So in this case, we will draw the line like this. So this is called a single candle pullback, like a single candle swept the low of the previous candle and we draw this line, okay? This pullback line, this is called pullback. Now, there are some other things to it. We will discuss it, but first, let me draw this. Let's suppose there are some more bullish candles. So what happened? The price again started going up. So this is kind of a trend, okay? In bullish trends, you see this kind of price action. The price retests the low and then it starts going up. So you can see pullback and again the price went up, okay? So this is called a pullback, okay? A single candle pullback. But there are some other things to it, like let's suppose the price was going up like this, okay? And then another candle, okay? And then another candle. Now here you can see that the third candle swept both the high and the low. Now how will you draw this line? So the price was going up, okay? Now in this case, we will first draw the pullback and then this line, okay? Because the close is bullish, so the price has first swept the low and then it went up. So in this case, you will draw it like this. Now, if you get something like this, we draw this. You get these are closing candles, and then you get a bullish, a bearish candle, which sweeps both the high and the low of the previous candle. Now, how will you draw this one? In this case, the price goes up and straight, we will draw a straight line to the top and then it went down. So in this case, you only get the pullback line, not this one, okay? Because the close is here. So the price first went up to here and then it came down. Now there is one more thing, which is this, like the price. Let's suppose the price is going down in this case, okay, and then you get a candle which neither sweeps the high nor the lows. So in this case, we will ignore these candles. Let's suppose another candle, and then another candle. You can see all the three candles, these didn't sweep the low or the high, so we will ignore them, okay? We won't count them. And then if we get another candle like this, so we will draw a straight line, okay? We won't draw this, okay? We won't count this. So this is pretty much all about the pullback. I hope you get the concept. Now, the backbone of this strategy is IDM, okay? It's so difficult to find it on a live chart, but if you watch this, it will be easier for you to find IDM. So what is IDM? In trends, we get a price action like this, okay? The price goes up, okay? Pullback, then again it goes up like this, okay? So in trends, we get a price action like this, but then at times we get something like this. So what's the difference here? Here you can see that this low was made and then the price made a high, and this low wasn't swept. The price didn't go below this low. Then again, the price didn't go below this low. But here you can see the price went below this line, okay? First, it swept the high, okay? This low was made before sweeping this high. So once the price sweeps the previous high and then it closes below this low, this is what we call IDM, okay? What is IDM? It is called inducement. So this is our IDM, when the price sweeps the low that was made before sweeping the previous high. This is called IDM. Let me draw some more. Okay, this is not IDM, but now again this is an IDM. Why? Because you can see it was made after this price swept the high, okay? This is the swing low that was made, okay? And it is swept now. So this is called IDM. Now there are some other structures like this, okay? Sometimes you get something like this. So is it IDM? No, because you can see that this low was made, but the price didn't sweep this high. Had this price swept this high, okay, then this would have been an IDM, but it has not swept the high. So this is not an IDM, okay? In case something like this happens, now this is an IDM, okay? Now this is an IDM because this low was made, okay? And then the price swept this previous high and now it has swept this low. So this is an IDM or inducement. In the bearish case, let's discuss a bearish example. You can see the price is trending towards the downside and then what happened? It swept this high, okay? This high was made before sweeping this low, okay? And the price went above it. So this is called IDM, okay? This time in the bearish case, okay? So again, the price starts going down, okay? Again, this is your IDM, okay? It is also called inducement. So you learn two things. First, pullback. What is pullback? When the price goes down, okay? This is called pullback, okay? And then in pullbacks, there are some pullbacks which are IDMs, okay? What are IDMs? IDM, when the price, in the bullish case, when this low, which is made before sweeping this high, it is swept, okay? This is called IDM, okay? And in the bearish case, this high was made before sweeping this low, okay? And then the price went above this swing high. This is called IDM, okay? This will not be an IDM, okay? Like if something like this one, this is not an IDM, okay? Just like this one. So you got two concepts now. The third one is breakout structure. Now you confuse it with, like people say, this is a breakout structure because the last swing high is break, so the price has broken out and now it will pump. This is not the case, okay? What people do is they get an entry here and they put the stop loss here. But what if IDM forms? Okay, if IDM is formed, they will be stopped out. So breakout structure doesn't work like that. So let me draw it again. So if the price is going up like this is not a breakout structure. So now here you can see we got the IDM. Why? Because it swept this low which was made before sweeping the high. So we got an IDM. Now if the price breaks this high, this will be a breakout structure. Okay, if the price sweeps this area, now we will call it a breakout structure. So what is breakout structure? The breakout structure is a breakout of the previous high after an IDM is formed. Okay, after an IDM is formed. Now again, let me show you some more example. This is not breakout structure. Now again, this is a breakout structure. Why? Because it is formed after an IDM. Okay, so I will show you a bearish example. This is not breakout structure. Now we got an IDM. Now if it closes below this will be a breakout structure. Okay, this is a breakout structure in the bearish direction. Okay, why? Because there was an IDM before this breakout to the downside. So I hope the concept of breakout structure is clear now. This is IDM, okay, in the bearish case, and this is our breakout structure. Now, why I am teaching you inducement and breakout structure and pullback? I am teaching you these three things because I want to teach you valid highs and valid lows. Okay, you can't identify valid highs and valid lows if you don't know these three concepts. Okay, so now we will discuss what are valid highs and valid lows. Now the price is going up like this. Okay, so none of them is a valid high or a valid low. Why? Because you can't place stop loss below these lows. Okay, we can't place stop loss here because it can always do an IDM and then it will go up. So these are not valid lows or highs. Now when IDM forms and then you get a breakout structure, now this is a valid swing low. Okay, this is now a valid swing low. I will write it here. This is now a valid swing low. Why? Because there was first an IDM, okay, and then there was a breakout structure. So now this is a valid swing low and you can place your stop losses below here. I will teach you later how you can get an entry, but this is now a valid swing low. Again, so far this is the last valid swing low. Okay, now again if we get an IDM and then a breakout structure, now the valid swing low will be this one. Okay, because we got this IDM and then we got breakout structure. So this low which is made after the IDM, this will be a valid swing low. Okay, there is one more case. If something like this forms, like you can see, this is now an IDM. So after IDM, price can still do something like this. Okay, and now breakout structure. So what is this? This is an IDM and this is a breakout structure. In this case, the low at the bottom, this will be the valid swing low. Okay, this, not these three. Okay, only this is the valid swing low. Why this is valid? Because you can place stop losses below here. Okay, this is the bullish case. Now bearish case, it's the same concept. Now this is a valid swing high. Why? Because an IDM was formed and then we got this breakout structure. So this is a valid swing high. I will write it here. Valid swing high. Now you know what is breakout structure, what is pullback, what is a valid swing high and valid swing low. So we will move on to the next concept. What is our next concept? it is order block. Okay, then we will discuss this change of character, and then I will teach you what will be the next move of gold, and I will show you some examples from the chart. So what is an order block? I am teaching you order block because once you get these breakout structures, then you look for entries. So for entries, you have to find order blocks. Like, you cannot just enter into a trade after the breakout structure, because the price can still go down to this area, and then it will be a big loss for you. Let me draw it. I am teaching you the concept of order block because you cannot just enter into your trade after the breakout structure. You can say this is IDM. Okay, this is breakout structure. Now after the IDM and the breakout structure, you know that the price is bullish and the price will go up even more, but you can't just enter after a breakout structure. You have to find order block in this area. Let me draw it from this top to this bottom. Okay, from this top to this bottom, in this area you have to find order blocks, and you have to use that order block for your entry. Let's suppose here is an order block. This is where you will enter, and then your target will be these swing highs. Okay, let's suppose this was the order block. Your stop loss will be below this swing low. Okay, because this is now a valid swing low, and then the sweep of this stop, this will be your target. Now we will discuss what is order block that you have to find in this area. Okay, in this area. So let's suppose okay, I will remove this one. Let's suppose the price was going down like this. Okay, price was going down in this area, then we got another candle. So for order block, the first condition is that the first candle of, let's suppose this is the first candle of order block. You will know why this is the first candle. This candle should either sweep the low, the high, or both. Okay, this will be valid. In this case, this will be valid. Now it has swept the low, this is valid, and even if it sweeps the high, this will be valid. Okay, so now this is a valid candle. The price is going down. We are discussing this area. Okay, now let's suppose we get a candle, a bullish candle that closes above this red candle, and then we get another candle. So now you can see that between this candle and this candle, the bottom of this candle and the top of this candle, there is a gap, this gap. Okay, ignore the candle in the center. Okay, the gap below this candle. Okay, either it's a body or the wick, and this candle top. Okay, above the body or the wick, this gap is called fair value gap. So if a structure like this forms, this is called an order block. This candle can be a red candle. Okay, it's not necessarily a green candle. So this can also be a red candle. We just have to find this gap. Okay, this candle can also be a green candle. Okay, but it has closed like something like this can also happen. Now this will be green. So this can also be a green candle. It doesn't matter, but it should sweep this low. Okay, now this is a bullish order block, and in the bearish case, structure like this will happen. Price is going up. Okay, this candle has swept the high, and then a bearish candle forms. It sweeps the low, then another candle forms. Okay, and now you can see the gap between the bottom of this candle and the top of this candle. There is a gap now. So this is an order block. So you have to find this structure in this area. Let's suppose the price was going down like this. Okay, let me copy this one. Okay, the price was like this, and then what we got a candle like this in a closing candle, and then got another candle, and we got this gap. So in this case, when the price touches the top of this candle, okay, this will be your entry point. Okay, and in the bearish case, when the price touches this candle, either the wick or the body, this is where you will enter into a trade. I will show you these patterns in the chart. Okay, But first understand this, that we have to look for order blocks in this area for our entry into our longs. Okay, one more thing. For IDM, you can use just a wick, okay? The body close is not necessary, okay? It can either be a close with the body below this area, or it can just be a wick. But for the breakout structure, it has to close above this, okay? Wick won't work. It has to close with a body like this. There should be close like this. Okay, if you get something like this, it is not a breakout structure, okay? Breakout structure has to be with the body. So for IDM, you can use a wick only, but for breakout structure, you will use the body. So I hope this concept is clear now, the concept of the order block and the concept of breakout structure. Okay, so you can see now I will discuss choch, but first let me summarize it. Okay, we got an IDM, we got a breakout structure, there will be an order block, and boom, okay, we will get this pump. Now in the bearish case, price is going down, you got an IDM, you got the breakout structure, there will be an order block, and then price will go down. Okay, what is change of character? So let's suppose the price was going up, was trending, you got an IDM, you got a breakout structure. Now what happens is that the price comes down into this order block and then it pumps. But when it reaches a certain resistance on higher time frame, what happens is that after the IDM and breakout structure, the price closes below the last valid swing low. Okay, our stop loss was here, but at this time our stop loss gets hit and it closes below here. Now we say the choch or change of character has happened, and now the market will move in the opposite direction. I will show you from the chart, from the gold chart, what is choch. But first understand this. This is a choch because this was an IDM, a valid swing low, and the price is now closed below it. So in this case, what will happen is that the price will now enter into a bearish trend, okay? So this is the change of character. I hope this concept is clear now. Now I will show you these things on the chart, some examples of how you could have traded gold with this strategy, okay? And then we will discuss what will be the next move for gold. So let's suppose you are looking for entry in this area, okay? Let me zoom it. So you will draw these lines. Okay, the price was continuously going up, and here you can see a low was made. So okay, then it went up. Okay, and okay, so it here this was low, and then price again went up, and then went down. Okay, now you can see that this was a swing low that was made before sweeping the high, and here you can see that it is swept. You see the price went below this swing low. So now we got an IDM. So what we will do now, we will wait for a breakout structure. What will be breakout structure? A close above this area. So now you can see the price went up and it closed above here. Now both the conditions are met. The price gave an IDM and then a breakout structure. Now the next thing is looking for an order block, and you can see this is a candle. This candle has swept both the high and the low, so this is a valid candle. Now the next candle has closed above and then another, and then there is a gap between the top of this candle and the bottom of this candle. Ignore the central candle. So this is, you can see, the fair value gap. Okay, we'll remove it. Now this candle, this big candle, this will work as an order block, okay? And once the price reaches the top of this candle, this is where you will get your entry. So this will be your entry. Your stop loss will be below the recent swing low, and you will target these highs, okay? The high are when the breakout structure happened. So then you can take your profits here either completely or partially. Now you can see the price has entered into a trend. The price is coming down, going up. Okay. Now there is no IDM. The price is continuously going down and going up. So no chance of an entry till this area. So if you didn't get an entry here, you can't get an entry in this area. Okay, so now here you can see that after this breakout structure, the price came down. So we got an IDM because the price swept the low that was made before sweeping the high. Okay, these lows. So we will draw this line. And what did we get? We got IDM here, okay, on the 4-hour time frame. This is the 4-hour time frame. Now after IDM, what's next? We have to wait for breakout structure. We won't get an entry. We are still waiting. Breakout structure happened. Now the next step is looking for order block. And as I said, watch complete lecture. Don't miss any part. Now there is another important thing that you can see. One order block is here. Then we got an order block here and here. Now, which order block should you use for entry? You can see this is also an order block, but it didn't give a pump. So you have to use the last order block, okay? The order block at the bottom. So you can see this is the last order block. This candle has swept at the low of the previous candle, okay? So, and then it closed above it, closed above, and there is a gap also. So this candle will work as our order block. We can get our entry once the price touches the high of this candle. So let's see. This is a 4-hour time frame, and we will get an entry here, and the stop loss will be below the recent swing low. The stop loss will be here, and our target will be the last swing high. And you can see the price went above the last swing high. So you can see we got another entry with this model, this IDM and breakout structure. So if you can use it the right way, it will give you trades. So now this was the 4-hour time frame. Now I will give you an example on the 15-minute, and then we will discuss what's going to happen next for gold. So I will just shift to the 15-minute time frame, and let's see what gold has to offer. And today gold went down, so I will explain why it went down and what's going to happen. So here you can see the price went up, went down, and then broke up, and then we got an IDM, okay, and then we got a breakout structure. Now, as I said, once the price reaches a certain area of resistance, then there is a chance of change of character. So in this case, this was a valid swing low, but you can see the price closed below it, so we got a change of character here, okay. You can see still the price is going down. Now what can you do? Where can you get an entry? You can see on the 15-minute it has come down. I will ignore the single candle pullbacks. Now went down. In case it goes up to this area, I will enter into my short, but with a smaller size, because there is an order block after the change of character. So I can get an entry here, and then it will go down, but the confirmation entry will be like this. If it goes up above this, this will be an IDM, this will be a breakout structure, and again the price will come to this area. There will be a certain order block, and then it will be good to short, not here, okay. Once the price goes above this area, and then it goes down and goes up to this order block, this will be your area for entry. Now this was the 15-minute. So what happens on the higher time frame? As we discussed, this was our entry point. This was the valid swing low for us, okay, this one, as this was an IDM low. So on the higher time frame, if gold closes below this low, then gold is done, okay. This will be change of character on the 4-hour, and then gold will go down, and it will go down for weeks or for months, okay. And then we will look for IDMs, okay, the bearish IDMs and breakout structure, and then we will look for entries to the downside. The same story will then repeat towards the downside. So this is pretty much all about these things, IDM, breakout structure, change of character, and order block. I also told you what's going to happen next. Okay, this is what I'm expecting. In case it goes up, then this will be another story, but so far I'm expecting this. Okay, this is a higher time frame. If it closes below this, then gold is done. And on smaller time frame, I told you how you can get an entry. So if you have any questions, you can ask me. I have a WhatsApp group also. I will share the link. You can join that group. I also share some trades there, and we give some giveaways. So you can join it. I will share the link. Thank you guys.